This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping the show on November the 7th, 2014. Our time is 8:45 Mountain. Radio show runs on your favorite radio stations, 630 CHED in Edmonton. I should remind everyone, next weekend, normally we're on Sundays at 3, next weekend going to be on at noon, prior to the Western semifinal that the Eskimos are hosting at Commonwealth. At this point, we don't know who they're going to be playing, but good luck to the Eskimos in the Western semifinal. I should remind everyone that our radio show, we're portable. We go anywhere you do. We have, obviously, streaming, which is Harold's two websites, HESradio.com, rarecoloreddiamonds.com. The shows are streaming there. A podcast, too, through iTunes. Type in The World Financial Report on Radio in iTunes. You'll find the podcast. Our show is portable. We go anywhere you do. We have a free weekly newsletter, the companion to our radio show. If you want to see and read the articles that Harold and I are on a weekly basis, all you need to do is connect with Harold at rarecoloreddiamonds.com or call 1-800-432-1022. Harold will be happy to send it out to you via email, free of charge. This week, obviously, the economy was center stage due to the fact that they had an election, midterm election in the United States. And to say that the Democrats in the United States were obliterated is an understatement. Everyone keeps saying that the economy is improving in the United States, and yet the average voter obviously didn't feel that way because the U.S. President Obama paid a huge price. They lost the Senate. The Republicans control the House and the Senate now, and really a massive sea change from blue to red. And this obviously will have consequences for the final 2 years that President Obama is in office in the United States. Also this week, a German bank is charging negative interest. We'll talk about that later in the show. That's something that Harold had predicted. We're seeing it in Germany, a bank charging negative interest. You have to pay them to keep your money in the bank. Also, Russia may ban circulation of U.S. dollars. Banks are putting aside money all around the world. Different banks are putting aside money for penalties due to, and this is a major issue, currency manipulation. Some banks may face penalties of billions of dollars. Also, we saw the oil market dip down this week. Metals took a hit. We had somebody overnight dump $1.5 billion worth of gold futures on the market. You don't think there's some skullduggery going on in precious metals? You bet there is. Yet at the same time, Harold, U.S. American Eagle silver coins, they're sold out. We're seeing strong physical buying of gold and silver. There is some selling, but overall, very strong physical buying of gold and silver. And yet the paper market, we have the paper manipulators continuing to dump gold futures and bring down this market, which obviously is very maddening in the short term, although if you have a long-term view, it's obviously an opportunity if you believe in hard assets in the long term.
You bet, Randy. It's an unbelievable time. This week was absolutely crazy. You know, the thing is that President Obama was told to stay in the White House and not go on the road. If anybody was watching the U.S. elections, you know that the Clintons, especially ex-President Clinton, you know, was here in West Palm Beach, you know, supporting Charlie Crist, who ended up not winning. But the fact is that President Obama's popularity is so low, probably the lowest of any president in the United States history, and he was told to stay home, that he would not be doing any good if he went on the campaign trail and tried to help some of the elections go the way of the Democrats, but that didn't happen. And the markets were ridiculously volatile this week, and again, by dumping $1.5 billion worth of gold on the market when nobody was watching at night is just unbelievably horrible to the markets, and it just lets everybody know that these markets are so manipulated, it's sickening. You know, as we're taping the show today on Friday, gold is rebounding. It's up $22. It's at $11.64. we did see gold as low as 11.44. Silver's up right now about 31 cents, but it's below $16 now. We broke the 16.50 level. It traded as low as 15.33 this morning. It's trading right now at 15.84, but it looks to me like the market still wants to go lower. So basically what we see happening is that now that we broke 1180 in gold, which was the key support level, that's where gold came down to in 2011 from 1920 all the way down to 1180. So support and heavy support for gold was at 1180. Once we broke 1180 last week, now the next major level for gold to hit, and we probably will come very close to that, is about $1,000 in gold. So they've really been able to manipulate the gold market to trade the market down in the early morning when nobody is even watching the markets, when the markets are so thinly traded. And it's really sickening to think that this is happening in a country like the United States, where these are supposed to be free markets, where those that go into the market and put up their hard-earned money to speculate or to hedge or to do whatever they're doing, and finding out that they have absolutely no shot in the market because the Federal Reserve and the government and the exchanges have a different opinion of the market, and they're allowed to do things that nobody else is allowed to do. It's a really sickening situation. However, it will eventually come back and bite them, because the fact is that you cannot manipulate these markets forever. You know, when we first started recommending gold, it was at $250, and we're now at about $1,100. So we're still up 400% from where we first recommended the market. And even though silver's dropped from $50 all the way down to $15, $16, it's the same situation. We bought silver at below $4, and still it's up 400%. But the fact is that the market should be substantially higher than that. You know, Randy also brought up at the beginning of the show that there's banks that are being fined substantially for basically manipulating the currency markets. So here's what the story is. It's in the newsletter, and you got to read this. J.P. Morgan, which is one of the biggest banks in the world, faces U.S. criminal probe into currency trading. The firm is cooperating with a criminal investigation by the Department of Justice, as well as inquiries by regulators in the United Kingdom and elsewhere. It said yesterday in a quarterly report, the largest U.S. bank said it might need as much as $5.9 billion to cover losses beyond reserves for legal matters, up to $1.3 billion from the end of June. And that's the most since 2013. And then if that's not bad enough, the HBSC Bank set aside $1.8 billion for a Forex misconduct. Profits fell short of expectations in the third quarter after the bank set aside $1.8 billion for misconduct settlements and compensation for customers, including a potential fine for rigging currency markets. How sickening is that? These are supposed to be markets that are destined for hedgers, speculators, and producers. That's what the futures markets are for. That's what the currency markets are for. It's for the banks and for other institutions that use the currency markets to use it in a legitimate way in order to hedge certain positions, and these situations only work when speculators come into the market. So everybody's getting hurt in this situation because these banks are doing things that are so illegal, and these are the same banks that are shorting the gold and silver market. You know, the crazy thing is that we will read about this and we'll report it. You know, I don't know when it's going to be, but just like we're reporting right now about currency trading with these banks, the same situation will eventually come with precious metals. But by that time, most of the people that traded futures or options or those type of situations will have lost all their money by then. And then what do you do, and who do you sue? And, you know, they say that some of the money goes back to clients for restitution. I can assure you, I've been in this business 35 years. The clients never see anything. If they see anything, it's 2 or 3 cents on the dollar type of thing. So you can imagine how much money J.P. Morgan and HBSC Bank made if they're going to pay out $5.9 billion. They had to have made way more than that because, again, the regulators don't put these banks out of business. If that was a normal brokerage firm, a small brokerage firm that had done what these banks have done, they would have been closed down by the regulators, but that never, ever happens with these major banks and institutions. It's criminal. It's sickening. You know, the fact is that so many people go into these markets, to either hedge as a producer or as a user. That's what the futures markets are for. You know, the fact is that farmers use the futures market to hedge their crops and their cattle and everything like that. And if these markets aren't trustworthy, what in the world are these farmers and producers and not going to use? So it's really sickening to see that this is what's going on in this world at this particular point. You've got so much going on worldwide. It's happening also in Germany. It's also happening all throughout Europe. I read and it's in the newsletter, but the unemployment numbers in Italy and Greece and Spain are staggering. They're over 25%. There's no way in the world that Europe is going to get healthy again the way that they're going about things. And eventually, within the foreseeable near future, it's going to affect the economy of other countries. It already is. Obviously, it affects Russia. It's going to affect China and Japan. And it's definitely going to affect Canada and the United States because they're all trading partners with Europe. So things are really crazy at this particular point. You know, I'd like to get this over and done with already. I wouldn't mind seeing gold come down to 1,000 and silver come down to, 1450, 1380 in that area, and wipe out all the shorts in the market, get everybody out of the market. Let's get this over and done with, and then we can start back on what will eventually be another bull market in precious metals. At this particular point, again, it just doesn't make any sense if you look at the overall picture, because on one hand, you've got the market plummeting, and one day, I think on Thursday, the silver was down 65 cents in one day. There's no reason for that. And what's going to happen as a result of this is that the producers, the mines, are going to either shut down or go out of business, and there's not going to be any supply of gold and silver. In actual fact, Randy brought it up also at the beginning of the show, that the sale of gold of Silver Eagles is at one of the highest levels, and they can't keep up with the demand. So on one hand, you've got the banks dumping paper silver. On the other hand, the supply and demand situation is getting tough. The demand for silver physically is extremely high, but the supplies are very low, and it's going to get even worse, because if you owned a silver mine, and it cost you $20 to produce silver, and you're only able to sell it for $15 or $16 in the open market, how much silver are you going to produce? So it's not going to be that long from now that they're either going to stop production and they're going to see prices start to increase as nobody can get physical silver or physical gold, and that's what we see happening. I do see one more drop in the market coming again, seeing that we did drop below 1180. I see that we are going to go to possibly $1,000 in gold, and what that would really give us is pretty close to a 50% retracement. If you go back and look at the charts from 1979 and 80, you will see almost an identical pattern that happened in the metals markets back then. It was the same thing. Gold went all the way up from $25 or $35. It went all the way up to $200. Sounds very similar from our run, from 250 all the way up to 1900. It was almost the same percentage type run. And then what happened is that gold pulled from 200 when it hit its high. It fell all the way back to 100. And everybody at that point said the move in gold is over. They were liquidating. They were selling. Everybody was negative. And then the market took off and ran to $800. I believe the exact same thing is going to happen. I've traded these markets for 35 years, and again, I have no control over the market, obviously, but I have knowledge and working knowledge of these markets because I've traded them, and I've traded them for 35 years, and I still, on a daily basis, technically chart these markets. And what I'm seeing is lower prices coming, but much higher prices coming after that. I've always said to you, don't leverage these markets. If you've leveraged these markets, you're out of the market. The market has wiped you out, and there's no reason for that. You buy the physical metal, you put it away, and it's a hedge against inflation, currency devaluation. That's what it's supposed to be for, and that's what it's going to be mostly used for. Again, we've got an opportunity more than likely to buy gold at $1,000 or very close to it. We're going to be able to buy silver silver back again, below the $15 level, possibly in the $14 range. I think that's an unbelievable opportunity, and I plan on taking advantage of that myself. On top of it, I've spoken to you about us getting into the gold market, and that's pretty well done. We're building our website. You're going to be able to buy physical gold from my company, and you're not going to pay any commissions, any spread, any interest, any storage fees, nothing. We'll deliver the metals directly to you. So that's being set up. It takes a while to set up the website, but you're going to be able to go to our website. You're going to be able to buy physical gold in whichever quantities you want, and you're going to be able to buy it at spot price with no commissions and no spreads or no nothing. We're going to show you how to make money in the gold market again when the time is right to do so. There's not a lot of gold coming out of South Africa right now because they're still, so petrified about the Ebola situation there, and a lot of the Ebola is started in the mines in South Africa. So we're being very cautious there. There's not a lot of gold being shipped out, but I'm just finalizing my deal, which is pretty well finished, and now we're just building our website, which will be done hopefully within the next 30 days, which should coincide with the low that I think that we're going to hit into the marketplace. So we're going to be able to bring you physical gold at spot price. You're going to be able to buy it right online, no salesman, no commissions, no spreads, no nothing. You're going to be able to make some money in gold again, and we're going to show you how to do that. The other situation that's happening right now, which is absolutely shocking, is what's happened in oil. Oil's back down to, it's up strongly today, but it actually dropped to $77. 76 and change intraday. We said it could come down to 75. It could actually go a little bit lower than that. And the reason that it dropped that low is because of Saudi Arabia. Saudi Arabia really hurt OPEC tremendously over the past couple of weeks because in order for OPEC or Saudi Arabia to compete with the oil that they're producing up in South Dakota, the fact is that OPEC dropped their prices to the United States and basically, hurt all the other OPEC members. So you're going to see something happen there. I've been involved in oil for 35 years. I've traded that market successfully for that period of time. What's going on right now is truly unbelievable. But again, I've seen this happen before. I've seen the price of crude oil come all the way down to $10. And then when nobody was looking, that market skyrocketed and started one of the biggest bull markets of all time. There's just no way in the world that cheap oil is going to last, and we do believe that we are going to be very close to a strong buying opportunity in oil within the foreseeable near future. Again, I think it really sums it up the strongest when you see that how much gold and silver was dumped in the early morning trading when nobody was around. It's sickening to think that is being allowed to happen in this day and age. All it shows is that the desperation of the marketplace at this point is so desperate that they turn a blind eye to these companies, to these banks and whatever, and let them do whatever they want, even though they're destroying a marketplace and they're hurting people that put their hard-earned money into a market for the right reason. Again, if J.P. Morgan is being possibly fined as much as $5.9 billion and the HSBC Bank is looking at $1.8 billion for rigging the currency markets, that's the type of world we're living in right now. Randy, it's unconscionable. Just to think that this is going on, this is how desperate these banks and countries are at this point, that they're allowing this, which again takes all the credibility out of the marketplace. I don't know how people could actually trade the futures markets at this point knowing that it's a fixed game.
It's very, very frustrating. In fact, one of the hypotheses I read regarding the oil price is that the United States, using Saudi Arabia, was trying to bring Putin to his knees by bringing down the oil price because Russia is so dependent on a high oil price to obviously spread the wealth within their country and have money to operate a country. And
the same with Venezuela.
That's right, and they're doing it as sort of a punishment for going into the Crimea and creating problems in the Ukraine. So there's a lot of different things happening on a lot of different levels. But one thing we do know for sure, if you have a diamond and you're holding it in your hand, it's real, it's yours, it's physical. It's not a piece of paper that could be worthless at any moment. That is the same for gold and silver. That's why we advocate hard assets. Gold, silver, diamonds. We'll talk about diamonds a little later in the show. We have a stunning featured diamond this week, and we'll tell you more about the recent Argyle tender, which was a huge success. But that's why we're saying own things that governments can't print. Gold, silver, diamonds. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. Call him at 1-800-432-1022. Educate yourself as to why you should have hard assets in your portfolio at all times. That insurance policy in your portfolio. As I touched on a past show, with all the manipulation in the financial markets, and it's rampant in every market, what they have done is they've killed the canary in the coal mine. They have unhooked the fire alarm. There could be a fire alarm going off. We would not know it as a result of all the manipulation. That's being done by governments. You need to be your own government in your portfolio and protect yourself by having an allocation of hard assets. The person to speak to about getting those hard assets, rarecoloreddiamonds.com and Harold Siegel. rarecoloreddiamonds.com, 1-800-432-1022. One of the things that Harold had talked about was that at some point we would see a bank making you pay them to have money in the bank. And it begins. German bank charging negative interest to retail customers. On November the 1st, the first European bank has passed along these negative interest rates to retail customers. So if you're maintaining a balance of more than 500,000 euros at Deutsche Staatsbank of Germany, you now have the privilege of paying 0.25% per year to the bank. Bottom line, if you're responsible with your money and set aside some for the future, you will be penalized. If you blow your savings, go into debt, you will be rewarded. Also this week, and this was a big story that Bloomberg had, Singer's Elliott says, U.S. growth optimism unwarranted as data cooked. Paul Singer's Elliott Management Corporation, and he's with Elliott Management, said optimism on U.S. growth is misguided as economic data understates inflation and overstates growth, and central bank policies of the past 6 years aren't sustainable. The market turmoil in the first half of October may be a coming attraction for the next real crash that could turn into a deep financial crisis if investors lose confidence in the effectiveness of monetary stimulus. Elliott wrote in a third quarter letter to investors, nobody can predict how long governments can get away with fake growth, fake money, fake jobs, fake financial stability, fake inflation numbers, and fake income growth. When confidence is lost, that loss will be severe, sudden, and simultaneous across a number of markets and sectors. And that's why we're saying have an allocation of precious metals in your portfolio along with diamonds, hard assets. We're going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on November the 7th, 2014. Obviously, we will not be on the air because our show runs on the weekend on November 11th. And yes, we wear a poppy, and our radio show, World Financial Report on Radio, we do remember without a doubt. Next weekend, our show normally runs 3 o'clock on Sundays. We are going to be on at noon Sunday prior to the Western Final hosted by our Edmonton Eskimos and Go Green and Gold. We don't know who's going to be coming to Commonwealth to play us in the Western Semi at this point, obviously as we tape on a Friday. But we will be on at noon prior to the pregame show with Dave Campbell and Maury Scott. And to say we're excited about the Eskimos hosting the Western Semi and excited about the prospects of playing in the Grey Cup in BC in a few weeks is an understatement, to say the least. But good luck to our Edmonton Eskimos. Our radio show runs on 630 CHED in Edmonton on the radio, and we are archived as well, streaming audio on HESradio.com, rarecoloreddiamonds.com, and we have a podcast through iTunes. Type in The World Financial Report on Radio. You will find our podcast there. Harold's website, rarecoloreddiamonds.com, the world leader when it comes to investment diamonds, rarecoloreddiamonds.com. Harold brought this to us back in 2005 when he wrote a special report, Naturally Fancy Colored Diamonds, the best kept secret. People didn't think at that point that we would have investment diamonds, but we do. Rare colored diamonds have been a massive winner, a huge, huge winner. In fact, the overall price of Argyle Pink diamonds has tripled since 2000. Our featured diamond of the week is a 0.51 carat radiant cut, fancy, vivid purple pink Argyle. This is a beautiful diamond. The color on it is stunning. You can see video of the diamond. You can see a picture in our newsletter. Go right now to rarecoloreddiamonds.com. Rarecoloreddiamonds.com. Click on Featured Diamond of the Week. It is an absolutely stunning diamond. And Rio Tinto, they had their Argyle Pink tender on October the 8th. It closed. Last weekend, they released the results. It was the best they've ever had in the 30-year history. And as I said, Harold, according to Jean-Marc Lebeher, who's the managing director of Rio Tinto Diamonds, the overall price for Argyle Pink diamonds has tripled since 2000. And we congratulate you because you were the one who brought it to our attention first in 2005 with that special report, and it has turned out to be a massive winner.
Thank you very, very much, Randy. I appreciate you saying that, and I am very proud of that because, again, nobody considered diamonds as a strong investment because there was never a secondary market to resell it type of thing. So the more studies I did into the market, the more I found, and this is something that's really unbelievable because how much pink diamonds have actually gone up, but basically 20 years ago, there was pink diamonds around. You could have got a 5-carat pink diamond for a very, very good price in the hundreds of thousands of dollars. Now to get a 5-carat pink diamond, which is nearly impossible, are in the multi-millions of dollars. So that's how much these diamonds have gone up. As Argyle said in their last report, that their diamonds have tripled since 2000, but that's going to be nothing compared to what's going to happen over the next 5 to 6 years. You see, the mine is about to close, and that was one of the major reasons why I recommended buying Argyle Pinks, because they produce 95% of the pink diamonds in the world. It's only 5 years till the mine closes down. They're just not producing hardly any diamonds anymore, and the colors are starting to change, and the prices are starting to reflect that. The prices are skyrocketing. At the last 2 Argyle tenders, 40% of the diamonds were heavily flawed, called I-1 clarities, and they sold for record prices. In fact, every diamond at the Argyle tender sold for way more than what the anticipation was. I did attend the auction. I did attend the tender in New York, and the fact is that the prices of these diamonds were the highest that I have ever seen, and I'm as happy can be to see that happening because most of my clients own these type of diamonds. So the fact is that I've invested a tremendous amount of money for the next 5 years to make certain that it's my clients that are going to be able to get these amazing Argyle Pinks. And there's not a better investment that you can make because there's so few of them available that they never decline in value. They've never, ever declined in value, and the closer we get to the mine closing down, the more and more these diamonds are going to go up. Now, the best color you can get are vivid pinks. The featured diamond this week is a vivid pink. The featured diamond last week was a vivid pink. In fact, the diamond last week was pretty close to a carat, almost impossible to get at this particular point. And the color on that diamond was so spectacular that that's a diamond that will probably sell for 5 to 6 times or more what the prices are right now when that mine closes down. It's just another example of when you buy the very best, you get the most back for it. So the fancy vivids have got the deepest saturation. They go up more than any other diamond does. But the deeps and the intenses and the fancy pinks also go up tremendously, and the closer we get to the mine closing, those diamonds will take on a life of their own. They'll go up so much in value that it's not even funny. I'm so excited about what's happening in the diamond market. In fact, when I was getting dressed to come to work this morning, I was watching CNN, and all of a sudden they talked about the price of diamonds falling. So obviously it caught my attention, and they said the fact is that normal white diamonds are not as popular anymore for engagement because people are starting to buy colored diamonds now for engagements, and that is a new trend. Now, again, we knew that this was happening because we've seen such a large increase in our business in that type of in that part of the business. So it's colored diamonds, and now CNN is reporting on it. Don't forget, I came off of a successful interview on Fox News with Deidre Bolton. She has a new show called Risk and Reward, and we are one of the first people they called to do an interview on diamonds and on our secondary market that we just created. So the fact is that diamonds are a long-term investment. You don't buy them and sell them in a couple of years. It defeats the purpose of doing it. It's not a short-term investment. You've got to hold on to them. Give them a chance to go up in value. Give them a chance to become more and more rare as fewer and fewer of them exist. And with the Argyle pinks, we're definitely going to hit that because the mine is going to close down. There's not going to be any more pinks. So if you happen to own one of these, you're going to have a huge return on your investment. Now, 3 years ago, we started building the secondary market to resell our clients' diamonds. That in itself is a massive business, and it takes a long time to develop that business because when you really think about it, not everybody can afford to buy diamonds. In actual fact, in the United States, 75% of the Americans have less than $10,000 to their name. Our diamonds start at $20,000, go up to 30 to 40 million. So 75% of the population in the United States couldn't buy the diamonds if they wanted to. And they're not our target market anyways. Our target market are wealthier investors, people that understand alternative assets like diamonds, like art, which also is skyrocketing in price. On top of that, I've been looking into a classic truck for Colorado, and the prices of those have skyrocketed. So as people get more and more disenchanted with the markets, they get more and more concerned with the volatility in stocks and bonds and commodities and things like that, they tend to put money into something that they're going to have fun with, that they're going to get enjoyment out of, that they're going to put on their wife's finger and then sell it 10 years later and give us a chance to sell it at a profit. So we built 8 Siegel Fine Auctions 3 years ago. We've been interviewed 6 times on national television, Bloomberg and Fox, and in Aspen I was on the Jerry Bavino show for an hour all about diamonds. Now the fact is that our auction business is probably going to turn out to be the most important business and the most important contribution that we've ever made to the diamond business. But again, we're just building it. We're just getting clients that can afford to buy our diamonds. And the way that we're going about that, and it's worked out extremely well for us, is that we have a very, very good relationship with a charity that's very close to my heart, which is the Susan G. Komen Breast Cancer Charity. One of the reasons I got involved with them, one of the major reasons, is because I'm a firm believer in what they do. I know the woman who started it. I know the promise that she made to her sister. I know that she took $2,000 of her own money back in 1986 and a Rolodex and started the Susan G. Komen Breast Cancer Charity, and it was raised over $2 billion. You know, back in 1986, a woman that had breast cancer, it was a death sentence. She was going to die from it for sure. They didn't know anything about it. They didn't even talk about breast cancer on the TV or radio because it had the word breast in it. Now, 99% success rate for women that get early detection. And that's what I focus on, the good that this charity has done. But what they've done for us is tremendous also, because as a corporate partner of theirs, along with the Dallas Cowboys and Bank of America and Walgreens and some of the biggest corporations in the world also support this charity. We're a corporate partner of theirs, and basically we donate a lot of money through the sale of our diamonds. And we held an auction for them last May, the first event that we did, and we raised $500,000, and we wrote a check to them for close to $100,000. As a result of that, we have also been approached by 3 other charities, and we have major auctions coming up for these charities within the very near future. One of them will be in December, one could be in November, and one for the Girl Scouts will be in March. And they're inviting all their own contributors, all their own people, the people that have the money in which to participate in our auctions. So that's what my goal is. My goal is to build our auction business over the next 10 years, so when our clients are ready to sell, we have the clientele worldwide that are able and in a financial position to buy. So that's what we've been building. It's obviously tremendously successful because every auction that we've had so far has been successful. We've sold 90 to 100% of everything that we put up. But again, it's just getting started, so give us the time that we need in order to develop this business. And again, hold on to your diamonds. They will do nothing but go up in value. We're very, very excited about the diamond market. Also, I brought up last week that we have another diamond investment that is a private company that we own. It's the Natural Diamond Investment Company. And for the last year, we've allowed our Canadian clients to invest with us in our rough diamond business. And because they are basically involved in the transactions, we're actually buying actual physical rough diamonds with our clients' money. We are paying a very high rate of return. We're sharing the profits with our clients. So we pay our clients 24% a year, U.S. dollars. If you invest $100,000 with my company, you will get back $148,000 in 2 years in American money. So that's what we do. We allow our clients to invest in our private investment. It pays 24% a year, U.S. dollars, and we pay every month. We wire the money directly into your account for you, so it gives our clients a paycheck. For example, many of our clients are retired. If you have your money sitting in the bank, you're lucky to get 2% a year. You get 2% a month with us in American money. Some clients that put in 7 figures, if you put in $1 million, you're going to get back $240,000 a year, $480,000 profit over 2 years, and that's in American money. One of our clients just sent us an email. He was so ecstatic. He put in $50,000. His return every month is about $1,000 U.S., and he sent us the receipts from the bank, and his last one, because of the weakness of the Canadian and the strength of the American, he got back 1,140 Canadian on his money. And he was ecstatic. So that's what we're doing for our clients. We're not only in the colored diamond business, but my partners are from South America, and they're third-generation diamond people, and they own their own diamond mines that were owned by their families, for the last 3 generations. So basically their business is pulling rough diamonds out of their mine, which they sell to their clients, which are cutters and polishers, and the cutters and polishers cut and polish these diamonds and sell them to the jewelry trade. 99% of them are white diamonds. And that's the program that we're allowing our clients to invest in. So again, if you're not making the returns on your money that you want to make, and by the way, what we also did to guarantee our clients' capital that they put into the business with us, if we raise $25 million, I put $25 million worth of our own diamonds into the trust, which are held by the attorneys, to guarantee that if, God forbid, anything happened, that our client's principal is 100% taken care of, 100% by the sale of the diamonds. But I can assure you that this has been going on for 30 years now, and the fact is that it's a very, very solid business. So it is available to our Canadian clients. The reason that we pay such a high rate of return is that we're making a very strong return. We're doing 4 buys a year, and we include our clients in the profit. We're basically splitting it with our clients 50-50. So they're getting 24% return on their money in American dollars on a 2-year program, and then return of their money. So we're ecstatic that that's been going on for the last year. Our clients are ecstatic because it brings them an income. And again, if you're retired and you're concerned about your livelihood, give us a call and we'll explain the program to you. And if it's comfortable for you, we'd love to have you on board. Meanwhile, diamonds are exploding. The pink diamond market is on fire. The Argyle tender was tremendously successful. And again, that's what we bring to you. In the last 14 years, pink diamonds have tripled in value because of the rarity of the Argyle pinks. Now the mine is going to close down. The prices are going to continue to skyrocket. In fact, we expect the next 5 years to be the biggest years we've ever seen.
This week, our featured diamond, rarecoloreddiamonds.com, featured diamond of the week, a .51 carat, radiant cut, fancy, vivid, purple pink Argyle. Now, the overall price for pink diamonds from the Argyle mine has tripled since 2000. And the question is, what will happen to these diamonds as the Argyle mine closes in approximately 5 to 6 years? Where will the prices go? We obviously believe when you take away 90 to 95% of the world's pink diamonds, much, much higher. In Venezuela, they raised the minimum wage there to by 15%. In fact, they have inflation of 60%. And we all know here in Canada and down in the United States that the inflation numbers that they give to us are not very accurate. All you need to do is go into a grocery store, fill up your vehicle. If you don't eat and you don't drive, everything is great. But let's be honest, we all need to eat, and all of us need to be portable here in northern Alberta driving around. So let's face it, the inflation numbers just aren't accurate. You need to invest in items that the government cannot print. In fact, we had a quote this week in our newsletter. Get our free weekly newsletter, the companion to our radio show. This is a quote from Keith Wenner, and he says, the decline of the value of each dollar is an exact proportion to the gain in the number of them. And we know governments around the world are printing money. There's no getting around it. As a result, the value continues to go down. Invest in items like hard assets, gold, silver, diamonds that cannot be printed, cannot be replicated or duplicated. And in the case of rare-colored diamonds like a pink Argyle Herald, you're talking the rarest of the rare. In 1 year, the Argyle tender, they may bring forward 50, 60, 70 diamonds. And that's for the entire world for 1 year. You could put it in a champagne flute in the palm of your hand. It is the rarest of the rare. That's why people are moving into this asset class, because they understand that as governments are debasing the currencies that we all are in, you need to have a hedge against that, and it's hard assets.
Better believe it, Randy. And the thing is about the Argyle tender and about these pink diamonds is that they're the most concentrated form of wealth in the world. They're not large diamonds. In actual fact, to get a pink diamond over a carat is a tremendous rarity. To get a diamond over half a carat that's a pink diamond is one of the most sought-after investments, and those are worth hoarding. And the diamond this week, the featured diamond, is slightly over a half a carat. 95% of the Argyle pink diamonds are under a quarter carat. And even though they're under a quarter carat, it does not mean that they're not valuable. They sell for fortunes. The fact is that when you take even a smaller diamond, a smaller pink, and put it into a beautiful setting, and we do that for you, it increases the value. It gives you an opportunity to wear something magnificent that you more than likely never thought in your life that you would ever have a chance to own, or to wear something that's valuable, and to know that it's a tremendous investment, that when you're finished wearing it and having fun with it, you can give it back to us, and we're going to sell it for you at a profit. We only make money when you make money. We get 10% of the profit, and our clients get all the rest. So, again, this is such an amazing opportunity, and the fact is we will never have another opportunity to do this because, number one, there is not another mine in existence in the world today that produces 95% of any particular diamond. So, again, the opportunity to own a pink diamond when there will not be any more of them is really economics 101. Is supply and demand. Demand is extremely high, as proven by the Argyle tender this year, that every single diamond sold, and every diamond sold at record prices. And even though the clarity was not strong, they still sold for record prices. So I don't see there's a better investment out there than pink Argyle diamonds at this point, but yellow flawless diamonds do extremely well. Blue diamonds are setting records every time there's an auction. I'm telling you, this is one of the best investment markets you can make. Between diamonds and our diamond investment, a private investment, our clients are doing extremely well in the diamond market.
And one of the reasons that we brought up at the very beginning of the show, the German bank that is charging negative interest to retail customers for those that have 500,000 euros at Deutsche Skatbank of Germany. The reason we brought that to everyone's attention, that they're being charged 0.25% per year to be in the bank, is there are hard assets out there, like diamonds, that will do very well, that are portable wealth, portable private wealth. Instead of having money in a bank where you're paying them, and we could see that trend continue across Europe, possibly at some point could make its way to North America. A lot of people would think, oh, no, it'll never happen in North America. Well, never say never, because the situation that we're finding ourselves in North America, as they are in Europe, is deflation. And in those circumstances, who knows what they will do to try and inflate. And that could be money printing, charging negative interest in bank accounts. Really, it's the opening of Pandora's box if things get very, very bad. But, Harold, obviously a person has a choice. They can be sitting in a bank, being charged 0.25%. You're paying them negative interest. Or you can be sitting in a hard asset you can hold in your hand, have it in your own safe, or have it securely stored wherever you like, and know that in 5 to 6 years' time, the supply of that investment is completely gone. And we know already, as we've mentioned on the show, when it comes to pink diamonds, they have tripled since 2000. And what will happen? If you're sitting in the bank, you're going to be giving them money. If you're obviously in a diamond, we believe, Harold, that you're going to be doing quite well.
I believe you're 100% right. And again, it is quite frightening to think, and if one bank does it, another bank is going to do it, to think that you would actually, that the interest rates are so low that they're actually going to charge you to keep your money in the bank. How ridiculous is that? Again, you got to go a different route. The route that the world is going at this point here is quite scary, and again, extremely volatile. I'm saying at this point here, it makes sense to be conservative. You know, the fact that the metals came down to these levels and could drop a little bit further are going to be to our advantage. We're going to make an awful lot of money from this before this is all said and done. So, again, we'll have our website set up that you'll be able to go to. You'll be able to buy physical gold at spot prices with no commissions, no finance fees, no nothing, no spreads, no anything, just to get us back on track so we can start to make some money and average down and give you a fighting chance to make some serious money. On top of that, we have our diamonds. We've got some of the most beautiful diamonds in the world, investment quality, and we have the secondary market that we're building at this point to resell our clients' diamonds down the road. And then we have our private investment that deals in rough diamonds that is paying 24% a year, U.S. dollars, to our clients. I think we're doing a good job for our clients, Randy.
We are, and we'll end the show here today with a final comment from Harold. But first, a quote from Richard Russell. He says, "The old adage tells us there are no free lunches. This is also true when applied to real money, which is gold. Gold cannot be created by computer entry. It takes capital, long years of searching and mining, expenses to recover gold from the ground. Thus, gold, or real money, costs men's labor, risk, and capital. Yet fiat money, created from a computer, is in effect free lunch money. At one time, the dollar was freely convertible to gold. But over the years, the United States went off the gold standard, meaning that the dollar was no longer convertible to gold. Whereas the pre-1930 dollar implied that the holders of dollars actually owned a certain portion of gold. With the advent of fiat money, the dollar began saying, I owe you nothing. Thus, as I see it, fiat money is immoral in that no risk or capital was exerted to produce the fiat money. Fiat money is in truth free lunch money. No man-hours or risk are represented by fiat money. And an interesting point made by Richard Russell, that obviously this is something, money that can be printed out of nowhere. What is the value at the end of the day? Harold, we have about 30 seconds left. That's why we advocate having hard assets. You can have that value in your hand.
Exactly. And we also know by today's show and by the articles in the newsletter that the banks are fooling with the currency market. So, again, you just can't trust them. That's why we want to be in hard assets, something you can hold and something that you can trust. I want to wish everybody a wonderful weekend and a very profitable day.
To all those that were in town for the Canadian Finals Rodeo, hope you had a good time. The same from Farm Fest. We do remember on Tuesday, November 11th, wear a poppy. And don't forget, next weekend, we're going to be on at noon prior to the Western Final with our Eskimos. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.